Hey guys, Akil Stokes here. Welcome back to another video. If you guys are brand new, usually we start these videos with a lesson of the week, but this week we're gonna hop straight into the charts because, well, we just wrapped up a 4-day free online trading workshop and I'm a little bit lessoned out. If you didn't have a chance to see it, I'll give you some details about how you can watch the entire recording for free at the end of this video. But let's start off with a little bit of a recap of the trades that we've been talking about on this channel over the last few weeks. And it was a trying week for me in the markets. I didn't really take any new trades. I was focused on the workshop, which I'm kind of bummed about because there were some pretty good trading opportunities in the market. And Darren showed us that with that back-to-back cipher. But I did have a few longer term trades on. One was on the pound dollar, one was on the euro yen. We'll get to the euro yen, which is what we talked about in last week's video. The pound dollar, we've been talking about this all year as this has been my second chance at getting a home run trade. So if you're new and you haven't caught up yet, I do recommend going back to week one and watching it. We've been looking for home run trades on the pound dollar. And for me, a home run trade is a trade where I look for extended targets. Typically, I'm pretty conservative in the market. I want to get in, I want to get out, I want to look for the next opportunity. But when everything lines up, when we have those really good opportunities and I think the market has room for expansion, I want to leave a partial position on to catch that move. And with the pound dollar, we're looking for a move to 140s, which you can see was achieved. So tap yourself on the back if you're someone that did that analysis with me. Now, the trying part for me, and this actually happened live during our workshop, is that unfortunately, I wasn't able to see profits get all the way to that point. And that's because I was stopped out on trail stops. Now, trail stops is a form of active trade management, and that is a secondary part to your trading, right? The three main parts of your trading are entry, stops, and targets. And remember that 90, 95, 99, whatever number you want to use, percent of the work in trading is done before you ever enter the trade, right? Charles talked about that, about determining targets and stop loss and risk profile and position size and all that stuff. Once you make the decision to enter the trade, the rest is really up to the market, right? You don't know if the market's going to go in your direction. If it does go in your direction, you don't know how long it's going to take to get there. Your job is basically to trust your analysis. Well, the part that we like to add on, typically once our traders get comfortable with the first section, is active trade management. And this is a form of risk management, right? I don't personally touch entries. I know you can do it on the entry side as well. The way I do active trade management is trailing stops. So as the market, or if the market proves to be going in my favored direction, I want to reduce my risk, right? So first and foremost, getting my risk off the board, taking it from my stop loss to break even, and then hopefully, right, preferably locking in profit. So worst case scenario, if the market does reverse against me, I still make some money, right? And you know, it seems glorious at first, right? Some of you guys are thinking, well, that's amazing, right? You know, that's the situation I want to be in. But remember, in trading, there's a pro and a con to everything. There's a give and a take. So when you trail stops, there is a sacrifice. And this is exactly what happened to me. So if we go back to the initial trade, right? The initial trade was right down here. I'll kind of give you the idea of what the risk reward was looking like. Initial trade was down here looking for a retest of previous structures with target 2, looking for a move to, wait for it, 140 all the way up here at target 2. You can see why I called it a home run trade. And you can see that it worked pretty good, right? It was pretty much a pain-free trade to target 1, meaning that price action just went exactly up to target 1, didn't do anything funny. We got a little bit of a hold at structure, not enough to make you worry about anything. And then we exploded up, right? And we exploded up all the way to the point right here to about 39.50s, which is about 50 pips away from the secondary target. And at this point, we're in a lot of profit at this point. And by then, or I guess first and foremost, by the time target 1s are hit, stops are moved to break even. By the time we get up here, what I did was I reduced my stop loss right underneath this level to lock in any profits. Because from a technical perspective, right, if I'm right, this level should not be violated. To now, right, who can tell me where we're trading at? That yellow line, where are we trading at? Previous structure, right? This is also a level where my trail stops are hidden below, right? So although I got involved right here, right, I don't have any open position risk open. That would be stupid, right? After my target ones were achieved, I moved my stops to break even, right? No more risk, right? You put some money in the bank, reduce that risk. But also, as price action ventured up and created different levels of structure, this is what we call a trail stop, right? So now in the second half of my position, the worst case scenario isn't just break even, it's a little bit of profitability. And as we pushed up, my trail stops are currently hidden right at 138.69. And this candle is going to be very important. This current candle is going to be very important. This previous high momentum candle came right down to previous structure, right? Although we spiked past it, we did not break and close below it, so we don't have a violation. This current candle right here, who can tell me what this is called currently? It's only about 14 minutes young. It's a baby candle. This is called a doji, right? Or, some may call it a spinning top as well, right? This is a sign of indecision, right? So you see the wicks to the top, the wicks to the bottom, right? This tells us that at one point, the sellers pushed it down. At some point, the buyers pushed it up, and we're currently trading right in the middle. So this is that battle we were talking about, right? Buyers and sellers duking it out. Now I'm going to ask this again. I asked it earlier. Who can tell me which direction we're going to move in? Ah, good job. Good job. Right now, we don't know. Now, this could be very terrifying as a trader, but when you trust your analysis, you understand your place in the market, right? So I don't know which way this market is going to go. I can tell you this. If we break and close below that yellow line, I'm probably going to be stopped out. I would expect the market to continue lower. If we continue lower, where do you think I would expect the market to continue lower to? I'll give you a clue. It's the theme of the day. Previous structure, right? Again, my stops are right here at 69, so I would be stopped out in the process. If we can hold this level, right, I would expect to take another run at the highs. And we were watching this live in the market, and price action came down and it tested this level. It put in a doji candle, and then by the end of the session, it gave us a lower low, lower close. I was stopped out on trail stops for profit, but obviously didn't see the entire profit. Now, after that happened, what we did was we kind of rallied down or retraced down, complex pullback. My trading partner, Jason Grayson, actually got involved down here, which was awesome. So he was able to make some bank on this trade as well before eventually exploding up. And this is, you look at this two ways, right? Now, whatever way you want to look at it, I did the right thing by trailing my stops and trailing my stops at the right location. That's just in my rule set. But for you guys that are new, this is the downside of it, right? When you trail stops, you're going to take profit out at a higher location, right? And if this thing would have dove down and crashed, right? Well, instead of being break even on the second half of your position, you would have made money. It's a positive. However, if it does what it does here, you're going to be sitting on the sideline out of the trade while it actually hits your prediction. And that's the balance you have to make. And I wish I can tell you there's a wrong or a right answer. There's not. It all depends on what you're willing to sacrifice. Just know that you can't judge it in hindsight. So you can't look at this and be like, oh man, I'm never trailing stops again because on this particular opportunity, it didn't work in your favor, because it's just wrong to ignore all the other opportunities where it does work in your favor. So that's something that you're gonna have to dive into the numbers. Obviously, you wanna test it. You wanna see, obviously, how does it meet with your personality and your philosophy on trading, but also, what do the numbers tell you? Is it worth doing this, or isn't it worth doing it, or is it not worth doing it, I guess would be the right way. So that's my painful adventure on pound dollar. I don't want to look at it. The trade that we talked about last week here on our video was the euro yen, and I actually got involved in this as well. This was a similar trade, right? Looked for a pullback into structure, basically the same as the pound dollar. Pullback in the structure, got our higher high, higher close. Trade is in progress right now. Looking for initial targets at a retest of our previous structure highs up here around 128.36s. And then again, going for a bigger target on our secondary move, right? We have our VS1 level sitting up here as well. So looking for a move right underneath the 129 even handle. So see if we can go 2 for 2 with these continuation trades. So a little bit of a recap from last week. Now let's talk about this week. All right, so before we hop into the pair that I want to get into detail with this week, I want to bring your attention to a handful of opportunities that may be on the radar for next week, or that will be on my radar for next week, and maybe on yours as well. And it all starts off with looking at the Australian dollar currency index. Now, I'm looking at this I don't use indexes to make any correlations or anything like that in the market. But I want to look at this to show you, or just give you a visual of the strength that we've seen with the Aussie dollar today. I'm recording this Friday. It's 12 o'clock, so noon on Friday here in New York time frame. So I expect this to kind of level off a bit, but fact of the matter is we've seen commodity pairs rally this Friday. And if you look across the board on the Aussie crosses, we're going to see a similar setup or a similar type of movement on a handful of different pairs. Now, if you attended last week's workshop, you're going to remember a conversation we had on crowd psychology, human behavior, really the trading psychology as well, of why people buy, why people sell. And when you take that knowledge and when you combine it with technical aspects such as Aussie Swiss heading towards an upper VS1 level, Aussie Yen heading or right at an upper VS1 level, Aussie dollar here heading towards an upper VS1 level as well, but having room to move, this is going to set up some potentially amazing opportunities for the week ahead, whether you're a counter trend trader on the other three I just mentioned, or whether you're going to be a trend continuation trader, or both on the Aussie dollar here. So nothing that needs to be traded or discussed right now, but just be aware that we've seen a massive amount of strength across the board with Aussie pairs. We're going to see some type of reaction to that when the market opens. And I think there are going to be some amazing opportunities next week in the market. And of course, we'll keep you guys updated as you join us on a regular basis. Now, let's go to a more popular pair, right? The euro dollar. Euro dollar has two things that are setting up here, and this is going to go hand in hand with this. We'll wait till later, right? One thing, right? We have a potential head and shoulders setting up, right? So we have price action moving down, right? We have a retracement here. Again, a short retracement. We have almost an equal extension. Actually, so that's a pretty decent extension. But then we followed it up with a deep retracement, which gives us a warning side for the slowing, is that a word? It is now, slowing of the trend, right? We then have a push down. This push down refuses to meet previous structural lows, and now we're working our way back up. And this is called a head and shoulders pattern. This is a classic reversal pattern in the market. Now, there's two ways to look at this head and shoulders pattern, right? Depending on how you draw support and resistance, right? What's going to validate the head and shoulders is going to be a break of the neckline. And there's two ways you can look at this neckline. If you are a fan of horizontal support and resistance, so straight lines, left to right, no wigglage, this is going to be your neckline right here. If you like slanted support and resistance, like a trend line, right? I don't even know what my trend line tool is. F3? There you go. You're going to be looking at that. So depending on how you view the market, you're going to have two violation points. But no matter what, the projection for where you think price is going to go is going to be the same, right? A one-to-one measure move could be looked at. And this is what we talked about thinking like the other trader and doing analysis, right? Discretionary-based target taking instead of just something that's static. You can use a one-to-one measured move here. We can also take a Fibonacci extension from swing low to swing high. See what I'm doing here? I'm sneaking in all the things we talked about so you can practically apply it, right? So that knowledge you gain from your 12 hours isn't useless, right? Let's put it into the market and see how we actually use it, right? So you have a 127 and an AB equals CD pattern lining up at 122.31. Good place to take profits. Now, again, if you're an aggressive trader, you probably entered at the shoulder. I don't think that's a good idea personally, but you could. If you're a more conservative trader, you're waiting for the violation of this neckline, the blue slanted one or the yellow horizontal one, and then looking either to catch that breakout up to that next move or look for a pullback and then catch the next extension up. Now, if we do extend up, right, because some of you guys are probably asking, well, Akil, what if we bring a Fibonacci retracement on? And I was saving this for last on purpose, right? If we take a Fibonacci retracement from our swing high to swing low right here, we're going to have a 786 right above that level. And why is that 786 important? 3, 2, 1. Let's hit our little Enigma toolbar. Again, apologies for the yelling in the background. We have a cipher pattern right here. I'm going to delete the, what do they have here? A bat pattern in as well, right? And we're going to focus in on this potential cipher pattern, giving us an X to A, that first move down, A to B with that retracement. That extension is going to be our B to C. And if we can move up to that that 786 level, which happens to overlap with the 1414, we're going to have a potential bearish, we're going to have a completed bearish cipher at that level as well. So a few things here. If you're looking for bullish action, you've got a head and shoulders bottom, which gives you an opportunity to get bullish. If you are a pattern trader looking for some bearish action, you have a potential bearish cipher. And of course, if you're a price action trader that has a diversified trading portfolio or diversified portfolio of trading strategies, you can absolutely catch both on this, either by a stop and reverse or just by taking taking profits off at one and then putting a trade on at the other. Real quick, while we're on the topic, stop and reverse, if you're unfamiliar with that term, it basically means you're going from one trade to the other. So essentially, let's say you were buying on the head and shoulders, and let's say you bought 1 unit, right? We'll keep it nice and simple, right? You bought 1 unit at the head and shoulders, and you wanted to take your profits off instead of the 127 at the cipher completion and then immediately go short the cipher. Here's what you would do, right? You would sell 2 units, right? Before you bought 1 unit because you're bullish, you would sell 2 units. What selling 2 units at this level does is it gets you short 2 positions. One position gets you short, essentially getting you out of your first trade, right? You're 1 unit long on the first trade, so selling 1 unit gets you out of that first trade for profit. The second unit short puts you short 1 unit, because that's your position size, on the cipher trade. So that's a stop and reverse. Essentially, you're going immediately from one direction to the other. You're going immediately from being long to going short. So that's another way to handle it if you wanted to take advantage of both and kind of mesh the target / entry areas for the trade. So another reminder, the full recordings of the Emergence 2021 workshop are available until February 28th. All you have to do is go to our website, www.tier1trading.com, click the banner that says Emergence. It'll take you to a sign-up page, enter your first name, enter your email, hit register now, and we'll email you a link where you can view the recordings. Now remember, it is 4 days of education, 12 plus hours total, so do not wait until the last minute. Trust me, if you try to run through all of this information in the same day, you are going to retain only a little piece of it. So make sure you plan out your time for how you want to attack it and make sure you take notes. Also, next Thursday, I have a personal fundraiser that I would like your assistance with. I'll shoot it through an email. I'll do a video here on YouTube as well. But if you are willing to donate some money to a cause that I feel dearly about, I would appreciate your support. Again, I'll tell you more about that next week. And of course, you'll see me promote it on social media. But February 25th is the day that you want to pay attention to. All right, until next time, plan your trade, trade your plan. Hit that like button, leave me a comment or a question about anything in this video or anything in general. Subscribe if you're new, and I'll see you guys next week. All right, take care.